San Francisco, and this is Bloomberg Technology. Elon Musk says he's considering taking Tesla private if the stock makes some large gains. Why he wants to take the car maker off the public markets, potentially. Plus, Etsy has come back to life under a new regime. We'll talk with CEO Josh Silverman about his turnaround strategy. And more staffing intrigue at Uber. The man who co-founded auto trucking with a scandal-scarred Anthony Lewandowski returns. But first to our lead, Tesla CEO Elon Musk tweeted a surprising revelation that sent investors into a tizzy. He wrote, "I'm considering taking Tesla private at $420, funding secured." Over the last year, Musk and Tesla have been facing greater scrutiny from investors and analysts as the company burns through cash and struggles to meet production targets. But is going private a real possibility? For more, I want to bring in Bloomberg Tech's executive editor, Tom Giles, here in San Francisco. And in New York, we have Ivan Feinseth, Chief Investment Officer at Tigris Financial Partners. So, Ivan, what's your reaction to this?
Well, one of the incredible things about somebody as brilliant as Elon Musk, I think he tends to be a little impulsive. Going private at that level really wouldn't make sense for a number of reasons. The company needs funding to grow. And to go private at $420 a share would probably be a total of $72 billion, less the about $14 billion that Elon Musk has. He would probably have to finance around $58 billion, even in rates in the low teens, let's say 12.5% would be about $7.1 billion in interest every year. And even though he projects to be cash flow positive by the end of this year, that would not be enough cash to pay the debt. More importantly, he needs to raise $2 billion to build his new China factory. He's going to need to raise additional money to build the semi-truck. So when you need to raise money, going private would not make sense.
So we have to take this seriously. He's a public company CEO. But Tom, if this was April, I would say, is this an April Fool's joke? And people are saying, is this a pot joke? 420.
420, you know, it's not April, but he's made jokes before. He loves to burn the shorts. He talks about it all the time.
Is that legal? For a public company CEO to do this during trading hours?
How much sympathy is the SEC going to have for hedge funds? Are we really worried about you know, are we going to have a lot of sympathy for the hedge funds? It's a question.
Do we know how serious he is? Let's put it that way.
We know. So I was in an interview with Elon Musk 3 years ago where he talked about the virtue of being a private company, his regrets about having taken Tesla public. Dana Hall and I, who covers Tesla, were in the interview. He talked about, you know, how much more he prefers to run a company like SpaceX. He's also got this privately held company where it's outside the public scrutiny. It's outside the whims and the wishes of shareholders and Wall Street analysts every 3 months. Am I making the production targets? Am I hitting my cash flow targets? Am I hitting my profit targets? You get out of that for a while. That has an appeal. Remember, Michael Dell took Dell private several years ago.
Right, and everybody, huge transaction.
And every chance he got, he raved about the virtues of being private. Oh, I love this so much more, being outside the public markets, outside the scrutiny. But then again, he amassed a lot of debt. Ivan talked about this just before me. Dell amassed all this debt, needed a way to finance it, and so he's gone back. He's going back to the public markets. It's a complicated mechanism, but you know, the grass is always greener.
So Musk is going with it. He's responded to another Twitter user saying, "My hope is all current investors remain with Tesla, even if we're private. Would create special purpose fund enabling anyone to stay with Tesla. Already do this with Fidelity's SpaceX investment." So, Ivan, you're saying it's not necessarily even possible.
Well, it's possible. It's not unusual to finance deals that size. Deals have been done bigger, but one, it doesn't economically make sense for him, and two, in the stage that the company is in, it doesn't make sense because he's in a growth stage. He's not in a mature stage. Companies go private that are usually in a mature stage and they are generating significant cash. but the shares usually are not getting a valuation that shows the value of their cash generation. He needs the public markets for financing. I mean, it would be easier to raise financing in both equity and debt for him if he's a public company. And of course, if the company wasn't public, we'd miss all the fun we have following Elon Musk.
Shares have already been up after a report from the Financial Times that the Saudi Investment Authority has built up a big stake, 3 to 5%. Does that give Musk some more comfort here or some wiggle room?
Well, the more that he would have other equity investors willing to commit their equity to his going private transaction would help. But I still don't think in the long run it benefits the company. Also, you need to be a public company in his situation so he can attract and compensate key employees with the use of stock.
Tom, what else are we watching here?
We're trying to find out where is this secured financing coming from, that he talks about. We do have to take him seriously until proven otherwise. Who are the other big shareholders who come to mind, who have a lot of money and are looking for ways to deploy it, and who have a lot of patience? Someone who comes to mind, obviously, is SoftBank. We know Google tried to buy Tesla at one point, way back when. Apple is often seen as a potential acquirer. Are there enough of these parties out there who could get in bed together? And remember who helped Dell, and that was Silver Lake. So we've got a lot of lines out to find out exactly where this financing, if it's real, is coming from.
A lot of money and a lot of patience. Sounds like the perfect Tesla investor. Tom Giles, our Bloomberg Tech executive editor, thanks so much. Ivan Feinseth at Tigris Financial Partners, thank you so much for hustling over here to give us your thoughts. Meantime, SpaceX has launched its 15th mission of the year. Elon Musk's other company successfully deployed an Indonesian satellite into orbit early Tuesday. The reusable Falcon 9 rocket lifted off from Cape Canaveral in Florida. About 8 minutes after the launch, the rocket's first stage landed on a drone ship in the Atlantic Ocean. SpaceX is targeting about 30 total missions this year, up from a record 18 in 2017. Musk, busy as always. Coming up, we will take a closer look at Etsy's massive turnaround with CEO Josh Silverman next. This is Bloomberg. Since taking over as CEO last May, Josh Silverman has overseen an impressive turnaround at Etsy with shares up. The company has managed to expand its business and eliminate areas that weren't growing. And now Etsy has raised its guidance for the year in its latest earnings results. Etsy CEO Josh Silverman joined just now. So, Josh, a lot of pressure when you walked in the door, and investors are loving what you're doing. What is the next phase, though? A lot of the changes you've made are sort of the low-hanging fruit. How do you take it to the next level?
I think we're at the very beginning of the opportunity for Etsy. When we look at our total addressable market, if you take just our top 6 categories in just our top 6 markets and look at only the online portion, it's a $155 billion market opportunity. So I think we're at just the beginning, and it's really about creating a better buying experience, which translates into more successful sales for our sellers.
No pressure, though the share price has increased considerably, up over 300% since you took over as CEO. Do you have any concern that investors are being too enthusiastic?
My job and the job of my team is to really focus on delivering results for all of our stakeholders, for our sellers and our buyers and our employees, and then our shareholders, of course, benefit as well. So, we're going to continue to deliver the best results we possibly can. And we're very focused on doing the fewest things we can exceptionally well. And we're seeing great gains from that. We think the results of the past few quarters have been encouraging, and we're looking forward to continuing to deliver more.
What areas are you exploring that may be new or unexpected?
I think that part of where we maybe lost our way was losing focus and trying to turn too quickly to too many new things. If you look at, let's just take 3 of our biggest categories: home furnishings, jewelry, and apparel. Each of those are multi-$100 billion categories where we have more than $500 million of sales today, but so much room to run. We've got to make it easier for buyers to find the products that they love and to buy those products and then to come back and buy more and more. And I know with over 2 million sellers selling over 50 million items that are beautiful, items that are made with care, there's so much opportunity to do better just in the core categories and the core markets we're in today.
The Supreme Court recently made a big decision that states can now force retailers to collect sales tax even without a physical presence there. That means more taxes for online shoppers. How does that impact Etsy, the business? How does that impact your buyers and your sellers?
You know, it is not an existential threat to Etsy, but it does create more friction for our sellers. There's about 10,000 different tax jurisdictions in the United States alone, and each of those have different classifications for what types of goods are subject to what types of tax. That's very, very difficult for anyone to implement with excellence. So we think it's bad law, and we'll be working with the Congress and the state legislatures to try to come to something that is more effective and easier to implement. In the meantime, we'll have our sellers back, and we're investing in tools to reduce the burden and to make sure that we comply.
You also said at the time this decision was made that you'd continue to lobby Congress. What sort of actions have you taken?
So we are engaged in dialogue with Congress. And, you know, the nice thing is that I don't think this is a partisan issue. We're trying to help states achieve their financial goals, but do it in a way where we can succeed, and most importantly, where e-commerce can succeed and innovation can succeed, because we think that's been a key driver of the U.S. economy. And, you know, for us, we have 2 million sellers. 87% of them are women. They exist in 99% of the counties in the United States. Most of them are businesses of one running a global enterprise from their living room. So we think the needs of these micro-entrepreneurs are really important, and we're making sure that their voice is heard.
I'd love to get your thoughts on this tweet from Elon Musk that he's considering taking the company private, given that you came in with activist investors banging down the door. What do you make of the fact that, you know, Musk, who has been under great scrutiny from analysts and investors, might be considering this option, even though it may not make economic sense?
I can't speak for Elon. What I can say for Etsy is I think accountability is a terrific thing. And I think being accountable to all of our stakeholders makes us raise our game and execute better. And as we have delivered very strong financial results over the past number of quarters, we have also sharpened our focus and delivered great social impact results. And I'm very proud of the fact that diversity in the company has continued to increase, and that our environmental impact and our ecological footprint has gone down at the same time. So I think being accountable is helpful both for financial and for social results.
Now, you did have some layoffs in order to execute this turnaround. Do you see more job cuts coming, and what's the mood?
You know, what we did was we said, what are the fewest things we need to do really well? And then have the cleanest org structure where there's one person accountable to own each of those metrics, and with the team that they need under them, and with the fewest number of layers. That did unfortunately result in some layoffs. Since that time, we've been hiring and growing, and in fact, we have more than 100 open recs right now. So we're very focused on growing, but growing in a sustainable way.
So, last question. Obviously, you know, there's a lot going on politically, a lot of political and economic uncertainty given what's happening in the Trump administration, a looming trade war, possible new regulation. You know, what's your outlook on how these forces could impact your company?
So in a world where I think the economy is becoming more commoditized and people are buying more and more mass-produced goods, I think they crave ever more for human connection. And Etsy's mission is to keep commerce human. So the idea that you can buy from someone within your own country or in another country that's a real human that you can talk to, they can make that product just for you, I think that need is even greater today than ever. And I think it's something that's very defensible and ownable for Etsy. So we feel good about our opportunity going forward.
Etsy CEO Josh Silverman joining us now from New York. Josh, thanks so much for stopping by.
Thank you for having me.
Coming up, imagine a life without Google, Facebook, or Twitter. It may sound impossible, but it's a reality for people in China. We'll talk about a tale of two internets next. This is Bloomberg. Billions of people around the world use U.S. technology services like Facebook and Google every day. They are part of the fabric of people's lives, except in China, where Facebook is blocked and Google exited long ago in a refusal to comply with Chinese censorship laws. That said, Google is now trying to change that and wants back in on Beijing after an 8-year absence. But in China, people have made do every day without either Google or Facebook. Bloomberg's Shelley Banjo takes a look at this tale of two internets from Hong Kong.
A new search engine and app tailored and censored for China talks with Tencent to operate cloud services. It turns out Google's plans to re-enter China are even more ambitious than we thought. But challenges lie ahead, like winning government approval, fighting criticism from human rights activists, and enticing Chinese users away from domestic rivals. Consider this. Many Chinese teenagers have never even heard of Facebook and Google, unthinkable for the billions of users who can't imagine life without them. The reverse is true for many Americans who ask, what does WeChat or what does Baidu or Alibaba do? For Google, it's unclear whether Chinese customers would use their services anyway. China's tech scene is wildly different than it was when Google pulled out in 2010, and there's little evidence users would even want Western alternatives when so many homegrown Chinese options exist, like WeChat, Taobao, and Toutiao. So why does this all matter? More is riding on Google's twists and turns than just whether the company is putting profit over principle. Google's rocky relationship with China tells a bigger story of what happens in a world with two distinct internets, at a time when much of our reality is driven by what we consume online. Where we live physically now also determines what we see online. Distinct news, images, and information on the web can influence the way we vote, think, and ultimately act. Now, the big question is, if China and the U.S. are living in separate cyber worlds, how can we expect these countries to cooperate in the real world? Shelley Banjo, Bloomberg, Hong Kong.
Joining me now to discuss in New York, we have Adam Siegel, Director of the Digital and Cyberspace Policy Program at the Council on Foreign Relations. And here in the studio, we have Bloomberg Tech's Selena Wang. I mean, it really is a tale of two internets when you have a whole generation, Adam, of people in China who don't know what Google and Facebook are. And you also have a generation here in the United States. In fact, most people in the United States probably don't know what WeChat is or what Alibaba does. You know, talk to us about what the real differences are in China and whether or not people there actually care that they don't have a freedom of access to information.
Well, what we're seeing is the outcome of the Chinese government's vision of two separate internets, a Chinese internet and an American internet. And the Chinese wanted to have their own companies. They wanted to support Alibaba and Baidu and Tencent and the others. And they wanted Chinese users to have access to the information that Beijing approved. So that's what we see now. And we see that it is harder for the two sides to really come to any common agreement or vision about what cyberspace should look like. You know, U.S. firms had a vision of global interoperability and the free flow of information, and that's not the internet we have now.
Selena, back in 2008, 2009, 2010, when Facebook was blocked, when Google left the country, I spoke with young Chinese people in China and asked them if they cared, and they really didn't. They wanted a good job. They were doing just fine with the services that they had. Is that still the case?
I mean, a critical question here is even if Google and Facebook and the likes can get into China, do the Chinese populace even care? Will they even use these apps? And I think the question is very much up in the air. As you mentioned, many Chinese teenagers don't know what Google is or even Facebook or Twitter are. They're perfectly happy using Baidu and WeChat and the local services. The country has moved on without Western apps. And there's a pretty powerful study that was conducted by Beijing University and Stanford University, and they concluded that young Chinese people are apathetic. They did a more than year-long survey of more than 1,000 students, and they found that when they gave them the tools to bypass these censorship rules, nearly half of them didn't even use the tools, and those who didn't use it to browse blocked Western apps. And so what's worth noting here is that the Chinese censorship regime is so effective because A, it makes it very hard for people to access the information, and B, it creates an environment such that people don't even need or care to access that information.
Beyond this, Adam, you know, the Chinese government has become so much more sophisticated about how they actually block these websites, and the rules have become even more strict. Could Google comply and write new algorithms fast enough even if the Chinese government did want to let them back in?
Yeah, I think there'd be real questions about Google's ability to keep up with Chinese censorship. We know that the Chinese firms employ tens of thousands of people who take down censored materials. That probably would not be available to Google inside of China. They'd have to rely a lot on lists produced by Chinese companies. AI may go some distance in taking that down and helping them scale up for speed, but it would probably be some technological and economic challenge for Google to actually even comply if they wanted to.
Baidu CEO Robin Li says they beat Google once, they can do it again if indeed this happens. But Adam, talk to us about the compromises that would need to be made on both sides, the Chinese government side and the Google side, given that this could be happening in the midst of a trade war between the United States and China.
Well, I think the political fallout for Google would be high. I mean, we already have seen a number of U.S. politicians questioning Google's willingness to go along with the Chinese government on censorship in the wake of Google employees pushing the company back from Project Maven, which was cooperation with the Defense Department on artificial intelligence. So the optics of cooperating with the Chinese government and not the U.S. government look pretty bad for China, for Google. And I think for Beijing, there's the real question about what they would actually get from Google in the market. As we heard, there's plenty of competitors and plenty of Chinese firms that are already providing those services. And there's not really a lot to be gained, I think, from Beijing's side that Google brings to the table.
The New York Times, Selena, also made a great point that this alternative value system that Beijing has created isn't just in China. They are also exporting these ideals to other countries and this censored internet, if you will, to Vietnam, Tanzania, Ethiopia, where Chinese services are actually quite popular.
And this is a critical concern of U.S. lawmakers, is that Google bending to China's rules sends a very strong signal that the rest of the corporations around the world, if they want to do business in this country, they need to follow the lead of one of the world's largest companies that did bend to the rules. And as you mentioned, China is exporting their vision of cyberspace, of the digital internet. And a big piece of the One Belt, One Road is this digital Silk Road that ties together China to all of these countries in Africa and the Middle East, and they're exporting these telecommunications cables, their cyber standards, and that's what's very concerning here.
All right, Bloomberg Tech's Selena Wang, lots to discuss. Adam Siegel of the Council on Foreign Relations, thank you both. Coming up, we're going to talk about Uber. That's next. This is Bloomberg. Elon Musk said he's considering taking Tesla private in a radical step that would ease pressure on the money-losing car maker. He wrote, "I'm considering taking Tesla private at $420, funding secured." The announcement Tuesday stunned investors and sent Tesla stock price soaring before trading was halted. It followed news that Saudi Arabia's sovereign wealth fund had built a 3 to 5% stake in Tesla worth about $2 billion. Musk also tweeted as a follow-up, "I don't have a controlling vote now and wouldn't expect any shareholder to have one if we go private. I won't be selling in either scenario." Meantime, another day, another shakeup at Uber, but this time a former employee is returning. Lior Ron, who co-founded Auto Trucking with his more infamous business partner Anthony Lewandowski, will return to Uber and run the startup's trucking business called Uber Freight. Ron left Uber back in March, a month after Uber settled with Alphabet for $245 million over allegations it had stolen Alphabet's self-driving trade secrets. Now Ron is returning to Uber following a months-long behind-the-scenes negotiation to rework the terms of the auto deal, announced almost exactly 2 years ago. For more, we are joined by Lane Castleman, managing partner at Greenbrier, who used to be Uber's head of communications in the Americas. Also here, Eric Newcomer, who covers all things Uber for Bloomberg, of course. So what exactly is happening here? Shakespearean at Uber.
I know,
as
it's
always.
crazy. It's always some surprise. What seems to have been happening is that behind the scenes there's been this renegotiations of the part of this auto acquisition 2 years ago so that Uber could really invest in Uber Freight, their sort of human trucking logistics business. And once those negotiations got settled with Anthony Lewandowski and Lior Ron, then sort of it cleared the way for Ron to come back now that he's sort of at peace with the company to sort of lead that effort.
But is he really at peace, Lane? I mean, is there a risk here bringing back someone who has some baggage?
I mean, I think there are a lot of people that have worked at Uber over the past 2 or 3 years who maybe are entertaining coming back now that there's new leadership in place that still have something to offer the company. But the reality is there's not a lot of people with expertise in this space. So Uber doesn't have a deep bench to pick from.
Let's talk a little bit about the bench, Eric, because we've seen the head of HR resign.
Right, Leanne Hornsey.
In the midst of an internal investigation into whether she was ignoring complaints from employees, a very high-profile woman at the company. What really happened there?
There's a lot we don't know. I mean, there was this investigation. There had been an internal whistleblower that had complained, and those correspondence came out. And lawyers basically told the whistleblower there were some things that we could confirm, some things we can't. We're not going to tell you which. And their chief legal officer, basically said, trying sort of these issues in the court of public opinion isn't a great idea, and that it can be unfair. But then ultimately, Leanne Hornsey sort of resigned right after an all-hands meeting. So it was very sudden and unexpected. So it sort of came amidst media scrutiny, but we don't know exactly what particular incident really convinced her to resign or Uber to sort of push in that direction.
Meantime, the COO that Dara Khosrowshahi brought in to help right the ship, the New York Times had some reporting about some very off-color remarks he made in a meeting about an ad campaign featuring mixed-race couples. Along the lines of, how often do you really see mixed-race couples? Yeah,
I think the defense is sort of, analyzing the ad, trying to understand sort of whether the ad represented the people they were targeting, but clearly people in the room felt it was off color. We don't know sort of exactly what was said. He's certainly soul searching and trying to sort of get some leadership help around what exactly he should say. It was sort of a terrible moment for Uber to have, the turnaround crew basically sort of get hit with the same type of allegations that, Travis Kalanick and his leadership team sort of would have faced. Very hard for Dara Khosrowshahi, who sort of left a lot of the day-to-day leadership to Barney Harford. So you have this guy who's doing a lot of the heavy lifting, now is sort of emblematic of the behavior they were trying to leave in the past.
Now, Dara has made some other high-profile hires, like Tony West, the chief legal officer, hasn't made high-profile female hires, Lane, and also seems to be having trouble getting the ship in order. What do you make of it?
Well, I think it's not a question of if, but when. Dara's got a lot of work to do ahead of a hopeful IPO next year. I think he's going to look to the existing bench outside of the tech sector, right? So there's a lot of folks that are in corporate America who've proven themselves in various capacities, but he's got to convince them that this is the company that's okay to come to now, and he's got to bring them on board. That takes time. It's not overnight. He hasn't been in the job long enough to have completely built out a full leadership team.
I did speak with Tony West, and he said it was a long process making the decision to leave his comfortable job at Pepsi and join Uber. What are you hearing from people who work inside the company about whether there really has been a true culture shift?
Yeah, it's a great question, because I think the culture shift is being felt among the entire team. It's a huge company now, but the folks that have been there for a long time, 4 years plus, which is funny because in tech we say 4 years is a long time. In the real world, it's not. The folks that have been there for more than 4 years feel like it's a new day. It's a new company with new leadership, and the problems of 4+ years ago are behind them, and they're excited and pretty bold about the future.
Eric, meantime, regulatory issues continue. Now in New York, we have the city council poised to approve a cap on licenses for Uber and other ride-sharing drivers, which would be a pretty
terrible
big blow.
For Uber. Terrible. I mean, I think old guard Uber, I'm curious what Lane thinks. I mean, Uber beat Bill de Blasio back and gave it all this room to grow. And obviously, it's sort of locked in some of those gains, but any sort of idea of a cap would be terrible for Uber, and then minimum guarantees on drivers would distort the marketplace. So from a business perspective, it's pretty shocking, and definitely sort of Travis Kalanick crowd sort of asking, did Dara invest in sort of the war room style fight with New York that they'd done? And I'm curious what you were sort of
How terrible, Lane.
Well, I mean, for what?
Did Dara mess up here?
So there's a question about whether or not tech companies need to hire policy people, and this is definitely an example of the Full Employment Act for policy folks.
They have policy.
They have,
But I think most tech companies are going to need more, and this is why. Regulations always come back. Regulators are always looking for the easy way out. And in this case, this is the easy way out. Congestion pricing, actually changing the price of taxi medallions, helping the people that are most vulnerable in New York, those are big problems to solve. What's an easy one? Capping Uber.
Right.
That's something you can do with the stroke of a pen.
Now, got to ask you about one more story, because before you came on the show, you sold some of your Tesla shares before Elon tweeted that he was thinking about taking it private. You still have some shares.
I still do it. Maybe not enough. It depends
You missed out on the bump, but what's your take on this as an investor?
Well, I'm hopeful that the news today means something big is happening, and that is good for my remaining stock. And on the other hand, I'm hoping I didn't really screw up this morning.
Just as an Uber reporter, it's funny, Uber preparing to go public next year, and now Tesla going private. It's just such a reversal, just two ships passing in the night.
And we still haven't quite determined how serious Elon Musk is about this, but Lane, does his capriciousness and unpredictability bother you?
I mean, one of the reasons I'm an investor in Tesla is because it is so exciting and unpredictable that you just have to get along for the ride.
All right, Lane Castleman, managing partner at Greenbrier. Great to have you back, as well as our Bloomberg Tech reporter, Eric Newcomer. It's been a while, Eric.
Thank you.
Great story out today. Okay, for more now on Tesla and the possible financials on taking the company private, I want to get to Bloomberg's Caroline Hyde, who's been crunching some numbers for us in London. So Caroline, we've been speaking about whether or not this is even possible, or does it make economic sense. From your analysis, does it?
Well, I mean, we know that there's a $2 billion stake now being built by the Saudi investment fund, private investment fund, and then we know that there's still $50 billion that he's going to have to come up with. I mean, as a total, if it does come in at $420 is the share price that he'd been saying, this would value Tesla as a whole at more than $80 billion if you include their debt. But you can understand the rationale for someone like Elon Musk, who clearly enjoys running private businesses. He enjoys SpaceX that he runs. He knows that he's criticized analysts, of course, calling them blockheads to a certain extent, criticizing them on calls when he's had to go for public calls. And really what I'm looking at is also how many people have been pushing against Tesla when it's been a public company. I'm looking at the short interest at the moment. This has been building. It's still at elevated levels. When you go into the GTV library and look at how much short interest is on the Tesla stock, we're still at 27% of all that is floated. Many, not all are like the guest you're just speaking with and who are long this stock. Many have been getting out, and many have been taking active bets against it. He's been frustrated by the volatile stock price, I'm sure. He's now talking about wanting to sell out at potentially $420, and this could therefore be the biggest leverage buyout that we've seen all the way since 2007. I'm going to bring you another chart that's really been fascinating me, because we know also that it's a company that burns capital. Maybe it's time to take it out of the mind's eye of the private and public investor and really take it off and be able to invest in it in the way he wants to. We've seen the cash burn and the talk about why he needs to raise yet more capital. How are we doing this? This is a key question. When you've got to raise $50 billion to take it private, and notably, he's got to be reinvesting in the business. We know that he's doing a deal in China to be building factories, China themselves looking to be able to foot some of that cost. But many of the criticism that is out there on this business in terms of cash burn, in terms of the debt that he has, and in terms of the short interest, I can see really why it's driving him potentially to want to take this company private.
Now, I do have another chart here in the GTV library showing Tesla spiking, the market cap spiking after this tweet, and before Caroline, trading was halted. I mean, obviously there are a lot of hoops to jump through before something like this could happen. It was a very long road for Michael Dell when he took Dell private. So what comes next?
Yeah, Gene Munster of Loop Ventures saying, look, he's got a 1 in 3 chance of actually achieving this. I mean, what comes next is the breaking news that we hear when we understand why the stock has been halted. They're still 14% lower than the price he's talking about, $420 per share. Well, we closed it when it was halted at less than $370. So there's still, the market is baking in real critique of this. I don't think they're buying it. You would have seen the shares rise so much more if they really thought that this was a done deal. 100%, we would have spiked all the way up to 420. So as it stands, there's still a lot of incredulity, I think, in the market at the moment. But we'll just have to wait how we might indeed see the stake in particular being built by the Public Investment Fund. How that might be built up yet further. We understand, of course, according to reporting, that they've built this $2 billion stake. They've built just less than 5%. Would they be looking to extend that? Is that where the rest of the money is going to be coming from? How on earth does Elon take out the rest of the shareholder base, which is some $50 billion worth? And as we're saying, if it's going to be worth 420, that makes the whole business, including debt, worth more than 80 billion. It's phenomenal. It would be the biggest leverage deal since 2007.
Right. And I, for one, still want to know why he picked 420, not 419, not 421. You never know.
Lucky number.
All right. Caroline Hyde in London, thank you so much for crunching the numbers. Coming up next, electronic voting versus a paper trail. Just how can we safeguard elections from malicious actors? We'll discuss. This is Bloomberg. The 2018 U.S. midterms are just a few months away, and U.S. intelligence services are continuing to issue warnings about possible Russian meddling.
They stepped up their game big time in 2016. We have not seen that kind of robust effort from them so far. As I mentioned publicly sometime just a few weeks ago, we're only one keyboard click away from finding out something that we haven't seen up to this particular point in time. But right now, we have not seen that.
So what can be done to safeguard the elections? Well, President Trump has an old school idea.
One of the things we're learning is it's always good. It's old-fashioned, but it's always good to have a paper backup system of voting. It's called paper, not highly complex computers, paper. And a lot of states are doing that.
Paper ballots. That's something my next guest can agree with. After all, as part of an experiment at the University of Michigan, he successfully hacked what he called worthless electronic voting machines. J. Alex Halderman is a professor of computer science and engineering at the University of Michigan. Welcome to Bloomberg Technology. So why are they so worthless? Why are they so bad?
Well, these voting machines are just like any other computer. They're powered by hardware and software has vulnerabilities. If an attacker, especially a sophisticated one like a foreign adversary, can find one little hole in the security armor, they can get in, install malware, and potentially change votes.
And you found that hole. How easy was it for you to break in?
Well, it's not just me. For the past 15 years, there have been computer scientists and state-sponsored studies all across the country looking into the security of voting machines. And the overwhelming conclusion is that American voting machines just are not built in a way that's secure enough to keep out the bad guys.
Now, is the real worry the hacking of the actual machine and changing the vote count, or is it about hacking voter registration and just making it harder for people to vote?
Well, those are both problematic areas. You could hack voter registration systems so people show up on election day and find they're not on the rolls. But I think it would be even more devastating if someone could get into the voting machines themselves and even change who won. That's what keeps me up at night.
Do you believe that has happened? I mean, so far, we've certainly seen evidence of robust meddling, as Dan Coates said earlier, but there's no concrete evidence that the vote count was actually changed.
No, there's no evidence that the 2016 vote count or any previous American election has been stolen in a cyber attack. But the problem is the vulnerabilities exist. And so it's only a matter of time until our enemies take advantage of them.
Trump says a paper backup is good. You agree with that. Is that something that we could quickly institute for these upcoming midterms? Because for the next 3 months, I mean, there's just not a lot of time left before we all have to go back and vote.
Well, fortunately, about 70% of American votes are already recorded on paper. And there are only 5 states left that are completely paperless. Those states could, if they wanted to, implement paper as an emergency measure. But the problem is that progress so far since 2016 has been fairly slow, and the remaining states are going to have to somehow find the money to upgrade their systems.
Well, and House Republicans just voted down a Democratic effort to increase election security funding. How optimistic are you that these 5 states are going to be able to do that, given that there's already evidence of the Russians meddling in the election again?
Well, states are going to have to act quickly, and Congress is going to have to help them, not only for the midterms this year, but in order to be ready for 2020. The fact is, states need not only resources, but also better guidance on how to secure their systems. And I think there's a potential for Congress to provide that.
So what's your outlook on whether or not the right things will be in place in November?
November, we're going to still have some gaps. Election security is a work in progress, and although I can say things are somewhat better than they were in 2016, especially in terms of awareness, we have a lot of work left to do. Congress needs to give the states guidance, and even this week, this month, Congress will take up a bill in the Senate that's co-sponsored by James Lankford and Amy Klobuchar called the Secure Elections Act. And there's a chance that this is going to create some actually robust cybersecurity standards for elections. We all have to watch carefully to see whether Congress can accomplish that.
Given what we've seen so far this year, what do you think we're at greatest risk of this particular election?
I worry most in this election about attacks that are going to try to undermine confidence in the results. The problem is that our systems are so fragile in so many different components that it's pretty easy to make things go wrong somewhere. And if we lose confidence that the system is recording and counting our votes correctly, well, that shakes the foundations of our democracy.
As it has been shaken thus far. Professor Jay Halderman of the University of Michigan, thank you so much for sharing those thoughts. We're going to continue to cover this. Coming up, a major European bank has backed out of advertising on Facebook because of the platform's, quote, ethical issues. Details on that next. This is Bloomberg. UniCredit, Italy's biggest bank, has stopped using Facebook for advertising, alleging the media giant hasn't acted ethically, a move other large companies have also threatened to make. The CEO added the company will not have any business relations with Facebook because the bank maintains that it hasn't acted properly. Commerce Bank suspended advertising on Facebook in March, only to resume again 1 month later after being satisfied by discussions with the social media company. Software maker Twilio delivered on its second quarter results, turning in a profit and giving a rosy outlook ahead of earlier forecasts. CEO Jeff Lawson has sought to increase Twilio's sales and profits by courting larger corporate clients. For the past year, the company has expanded the sales team and bolstered its product portfolio to take advantage of businesses seeking better ways of engaging with their customers. Twilio's customers currently include Uber, Airbnb, and bigger corporate stalwarts like Coca-Cola. And finally, the Trump administration says the judge who approved AT&T's takeover of Time Warner ignored common sense. The Department of Justice is trying to reverse the deal's approval. Antitrust officials say the judge ignored the core argument that Time Warner would have added bargaining power over rival pay TV companies that pay for its programming. And that does it for this edition of Bloomberg Technology. That is all for now. I'm Emily Chang. This is Bloomberg.